Hello everybody, Bob Pisani on the floor of the New York Stock Exchange, being joined now by Brett King, host of Breaking Banks. That's the largest financial technology radio show that's out there. Also the founder and CEO of banking startup Moven. And Brett, we have had quite a week in bank stocks moving up. Most of them are at new 52-week highs. What's your take on how the Trump presidency will be affecting bank stocks and the whole regulatory environment around bank stocks?
I think there's a generally accepted view that the Republicans like lighter regulation when it comes to banking. So I guess there's a feeling that banks may be able to be a little bit more competitive in this environment. You know, 70% of their IT costs right now are compliance costs. So that's got to be a benefit if they get lower regulation.
So the important thing here is a lot of people have felt that banks are dinosaurs. You as the CEO of Moven have often said these big banks are behind. The young startup firms like yours have got a big advantage. Is this new regulatory environment going to help them? Is it going to make them easier to compete against startup companies like yours that are sort of banking but not really banking?
So fintechs deploy capital very, very efficiently. The problem is not regulation. We face the same regulation as the banks do, but we deploy that capital much more efficiently. Their problem is really organizational inertia, the compliance load, legal load internally. I don't think regulation is going to help change that organizational approach to innovation.
Explain what Moven does and how you're competing against the big banks like JP Morgan.
So we're a downloadable bank account essentially. You download this app on your phone, you sign up for a bank account in your phone, and we give you advice as you use your day-to-day money, telling you how to be financially healthy. But our cost of acquisition is about 1/20th of the big four banks in the US, for example.
Do you think that some of these regulations will level the playing field, or removal of some of these regulations will level the playing field at all?
Some of the target might be, say, a CFPB, the Consumer Financial Protection Bureau. It's an artifact of the Obama administration, but that I think has been good for consumers. I don't know whether that's going to be an advantage for banks particularly, but I'd say that's probably going to be a target of the new administration.
Do you think the banks, right now we have banks moving up 15, 18, 20% just in a week by themselves. First on the idea that we're going to see lower regulations, but also higher interest rates are going to help out. Do you see dramatically higher interest rates in the next year?
Look, I think interest rates have nowhere to go but up. And net interest income is something from a revenue perspective that we've been missing these last few years. That could explain part of the bump on the stock price.
So where do we go from here? What do you see happening with the whole bank environment in the next few years? Trump obviously will make the regulatory environment perhaps a little bit easier, maybe by changing the Consumer Finance Protection Board, maybe by altering the Dodd-Frank rules and regulations. But past that, where is banking going to be, say, 2 years from now?
Fintech isn't going to finish. We see in London, we see in Singapore, we see here in New York, a lot of investment in fintech, a lot of investment in things like blockchain technology, and the banks aren't going to do that all themselves. They're going to need the fintech. So I see more collaboration, more cooperation with the fintechs happening.
So you think it's going to be even easier, for example, to open a non-bank account, say, essentially, get mortgages by the phone. It's all going to be more mobile, there'll be more algorithms employed. Where are we going to be 2 or 3 years
Listen, if the US wants to be competitive on the global stage, that's the way they have to go about it. Just take payments, for example. We've got faster payments initiatives happening in all the big economies around the world. The US right now, they're looking at 2018 with the Fed initiative for that, but that puts them maybe number 40 or 50 in terms of the economies that are pushing for real-time payments. So the US has to move faster, and I don't know if it's regulation. I think part of the problem is the federal state system in terms of getting these standards in place. We saw that with EMV, and I think we're going to see that with things like blockchain and real-time payments.
EMV being?
The EMV chip and pin card standard.
The US has been a little bit of a laggard in
10
that
years
particular
behind.
area.
Yeah, 10 years behind.
Are you optimistic, though, that the US is going to eventually catch up? We had JP Morgan, a number of big banks talking at a number of these conferences recently, and they're getting very aggressive now in these, what we now call fintech.
Well, they might buy Moven, so I'm obviously optimistic on that front. But, look, I think when it comes down to it, the US has the secret weapon of Silicon Valley and Silicon Alley here in New York, and the deployment of capital, the venture capital, is really fueling this fintech explosion like nowhere else in the world.
All right. Brett King, CEO of Moven, thanks very much for joining us. And of course, bank stocks, new 52-week highs today. Everybody have a healthy, safe afternoon.
Thanks, Bob.